Thank you for tuning in to another one of my podcasts. Today we had a big day. I'm recording on Monday, May 12th. The Dow was up over 1,000 points. All the other indices followed suit. Very strong day. The main news factor is that China and the United States are coming together in lowering tariffs, which obviously shot a positive into the arm of the market. I don't know that this is the only thing that's going on that's creating this bullish move. I don't know what it is, but who really does, right? And I can't predict the future, but I'm going to give you some price targets of what I think is going to happen just from looking at the charts. Now, remember, I believe that we're in a secular bear market. That's a bear market that's punctuated by high inflation and high interest rates. What we're in now is a cyclical bull market, a short-term bull market in that long-term bearish cycle. And these are the markets that you want to participate in to make money. We just saw a significant down move. It was exacerbated by the press. The press created this high volatility. I'll also tell you that the analysts came in on the front end. The analysts with the major brokerage houses and major banks set up what they believe to be a positive year. Then they lowered their targets. So now they're going to have to fight to prove their position. They can't jack their targets back up. They're going to have to fight it out and try and prove why they're bearish. So that bearish call is going to be a lot in the market. Also, individual investors have been highly bearish, more so than they ever have been throughout history. And so the bearishness is good because when you have somebody thinking one way, the market will oftentimes go the other direction. So we're in a bull move right now. A lot of analysts are looking for it to sell off and go back down to the lows again. We will see. Nobody knows for sure, but I believe we're moving higher in this bull phase. So let's go back to the previous podcast. You see this circle here? This is the Standard & Poor's 500. These are the months along the bottom. Here's the price along the side. And right here it was today. Why was today so significant from a price perspective? Well, you see this red bar here? That was Friday. Friday was red. It was down. Today it was green. It's up. But Friday's high was right here. And today's low was right here. So between Friday's high and today's low, there's what's called a price gap. There was no activity at these prices, no trading. It's very positive on the upside. Gaps are bearish on the downside. Gaps are bullish on the upside. What I think is happening is I think we had a correction in this cyclical bull market. We're seeing the inverse of what we saw on the way down. We saw gaps and we saw significant move, fast move lower. And now I think we're seeing the same type of technical picture as we head higher. So let's take a look again at this chart. This ellipse, what I did is I circled what was called an island bottom or an island reversal. They're very, very powerful. And I identified this island. And I said on April 30th, which was this day right here, I suggested that this island bottom or this reversal pattern gave us a target of 5,902. So that's right here. That's the target off this island reversal. So we went from here, after I identified this, to here. And now the next stop should be 5,902 or even more, because sometimes with these technical patterns, the target is exceeded, more often than not, actually. But something else has occurred. Remember a couple podcasts back, I pointed out a bearish flag. And what a bearish flag was is it was like you took a flag and you tipped it upside down, put it on its head, and that created this downside continuation move, which targeted significantly lower prices, which we hit. I had a target of 5,034. We hit it. We went through it. Now we're heading the other direction. And what do we have? We have a bull flag. So that's why I'm saying this up move looks just like the down move, all in the other direction. We're getting these same technicals out of this up move, which bodes well for a continuation of higher prices. Here's our flag. So you've got the staff. So here's the bottom. This flag's planted into the ground and it goes up here. And here's the flag portion at the top. Well, what we did is we broke out of this. This gives us a target of 6,285. So this gives us a target of all-time highs. So the odds of probability, no matter what's in the press, the odds of probability is that we are headed to new all-time highs off of this technical pattern, this significant island bottom and this continuation pattern of a flag. We've had a gap up. There's a lot of positives going right here to push this market higher. Now, we're going to want to sit back here and fill this gap. That gap's going to be like a magnet. However, we still have these patterns. We have this breakout and we have new all-time highs that are on the target. Anything can happen. You can't predict the future, but that's what I see from looking at this price. I've talked most episodes about breadth. Breadth is participation. You can think of breadth like a general going into battle. So if the general has a lot of his soldiers behind him, he's probably going to win the battle. If he doesn't have a lot of fighters, a lot of soldiers, he's probably going to lose the battle. So you can look at the general as being a major index like the Standard & Poor's 500, and then you can look at the soldiers as being all the individual stocks. So If you have a lot of stocks as the market is going higher that are participating, that broad participation means that there's a lot more probability that this market's going to continue to move higher. And this is a chart that I've put up maybe a dozen times in previous podcasts, and this is a chart of breadth. This is a chart of the stocks that are participating in the rally. And we started back in December of last year, and I was able to put a downtrend line across the top of this breadth chart. Now, this isn't price. This is the stocks going up minus the stocks going down. And if it's green, that means we had a good breadth day. But you can see that we broke out of this trend line. When you break a trend line, that's positive. When you break a downtrend line, that's positive because you've broken through that resistance. The likelihood is you're going to head higher, and that's what we're seeing here. So we saw a break above the trend line, break. Then we fell back down into here. We found support, and now we've significantly broken through this trend line. So this indicates to me that breadth is going to continue to expand, and that will help push these prices, the stock prices, higher. If you look closely at the breadth chart, you see that this is Friday, and Friday was a big breadth day. The market didn't have a good day, but the breadth was there, so you could see participation was coming in. I think that helped propel this day higher. And also, remember, with good breadth, then that solidifies or that adds further credence to the fact that we're probably going to go higher in this bull move. So call me if you have any questions, 949-497-6366. It's scott@dollarcapitaladvisors.com. Dollar Capital Advisors is my website. I'd be happy to help you out. I'd be happy to answer any questions on this. I would also be happy to take a look at your portfolio to see if it's positioned properly for what I think is this continued bull move. Thank you.